Hi everyone. So today I was thinking to talk about ETFs. I thought it was an interesting topic because um, like some people love ETFs, some people really despise them, and like to just explain a little bit what they are and how they can be used or not used depending on what your portfolio and what you're trying to achieve. So first of all, an ETF that stands for Exchange Traded Fund. So it pretty much has been created to track the performance of an index. I would say that before that was mainly for indexes, but nowadays it's becoming like there will be one for each industries. There are some for lithium, for AI, robotics, for commodities, for anything you can ever imagine. Pretty much you have one for it. The good thing is that it can be bought pretty much like a stock, and then you can just trade it in and out of it. And then like the percentage cost is quite small, so it's 0.05 to 0.20% a year. So I just looked online to get a sense, and then like Study Star pretty much was explaining that there were 9,000 of them, and like that would be a 10 trillion like the market cap for the ETF globally, which is quite a lot, I would say. So the good thing about ETFs, I would say simply, is just the volume. Considering it's like several companies merged together into one fund, it allows it to trade, and because like it's diversified, it's easier to trade in and out and without having a huge impact on the trade over one day. So that's the advantage. It's great as well because it's diversified, like I said earlier, and you like buying one individual stock will pretty much impact you if the earnings are terrible for one stock versus an ETF because it's a bunch of them together. If one earning doesn't go well for one company, it won't affect as much as long as the percentage of that company in the fund is less than 10%. It should not impact at all. So the good thing is if you are bullish about a sector and you're not too sure which one to pick, I would say it's actually quite a good way to just buy the ETF and forget about it. But then if you like me and want to do more research on every stock and pick the one you prefer, then that would actually impact you and thinking that, oh, I want only this company but I don't like this one, so that would make it a little bit harder. I will explain a bit later. So now I wanted to explain what I personally think about ETFs. So I would say that if you were to trade short term and want to do like in and out fairly quickly, then I would say that the big ETF like SPY, the US indexes, they're pretty good for that. That's a huge advantage because you can trade very quickly in and out with big volume. So if you want to hold long term, I would say it's quite good, but you have to be very mindful of what you're buying, and like I said in the past video, depending on which interest rate you are in, it could impact the ETF. So over the long run, like 30 years, buying an ETF might be very good, but for a few years it might not be as good, and then the next few years might be great depending on what you buy. It just depends. Like there are ETFs for everything now, so it's very hard to know. But overall, over the long term, if the cost is low and the companies inside the fund are great, then that's a good thing. So yeah, there are lots of them now, so I would say like you can always find the one for you. And at the same time, you have to be super careful because some of them are not actually doing what you think it is, and it could be a bit misleading, but we're going to explain that in the next slide. So the holdings inside the ETF. So I wanted to talk about this one because like a lot of people, they see like, oh, this is AI ETF or oil ETF. Oh, that's cool. I will just buy it and not really look at it inside. I just wanted to say that sometimes you get some very like strange funds. So like sometimes one company is half the fund. I have seen that in the past. I couldn't find an example, but I thought it would be something to like check. Then so the management as well could be impacted because some ETFs might actually do some tradings inside. I've seen that, or some recurring, like for example an oil that would like use contracts and then they will renew every month, which might not be the ideal scenario for someone that wants to hold long term. And finally the last thing is sometimes the name of the fund is called tech companies, for example, but it doesn't actually have that much tech companies in it, or like that's something I've seen as well. So that's not this example, it's another one I've seen around, but have to be very careful of what you buy. So this is a simple example of the most famous ETF, which is like the S&P 500. So that one is quite balanced overall, and I would just say that it's quite a good stock to buy. Stock ETF to buy in the long run. Although I have to be careful, obviously, because from 2000 to 2008, nothing really happened. But if you're really thinking of buying very, very long term, then it should be all right, I guess. I'm not recommending to buy this one. I'm just showing simply one example that could be a possible opportunity if you guys are into that. But I don't personally own any of the share or recommend it. It's just an example. So this one is again an example. I'm not saying not to buy or to buy. It's not any of my interest, but it's just to show that sometimes some are not good hold for the long run and might be just interesting for a short period of time, like the ETF on oil contracts. So I would say that this is to be careful and understand that not all ETF are just going up or down. They have use of everything, even shorting ETF and everything around. So if you don't know and just buy this kind of ETF, you would be surprised later, and that's what I'm trying to explain. So as being a value investor myself, I would just say that ETF is not really like the kind of thing I would tend to buy, because it tend to get the biggest companies, and then like pretty much, especially a diversified ETF, will get the biggest companies, and then like you want to get like the undervalued stock, so then you could potentially find undervalued ETF, I guess. But again, my decision was to be able to buy a value stock, and that's why I personally don't tend to buy ETFs. Although the more they create, the more I'm tempted to go that path, but right now I haven't done it. Yeah, so like that, and I would say that the concerning part for me was the research. So like the more, like you need to do the research for the specific company, and then need to do the research for the ETF, and then make sure that ETF is actually like organized properly, make sure the fees are not too expensive and stuff, and all that to me made me think it was a lot of work, and I thought it would just be easier to just buy directly a company. Obviously it's more maintenance and more work, but I wanted to share my opinion, and like what I found was a problem personally. Another problem, obviously, like you can figure, is that when you buy the ETF, you can't just say, hey, I want the Apple, I want the Facebook or Meta now, but I don't want any of the other ones. So obviously you can't pick, and you have to just grab the whole fund or nothing if you don't want it. So that's what I wanted to say as well. And as I said previously, that not all ETFs are good long term. Some are good like just for a few days or very short term, and that's one of those examples. For example, shorting the ETF is not something you would actually want to do for 10 years, because like in the long run, indexes tend to go up. So obviously you don't want to hold it for 3 years. Yeah. So overall, what I would just say is that I found it a bit hard to buy ETFs. I thought it was a lot of work to first trust the funds, make sure that they're doing the right thing, then the cost, and then on top of that, the companies that they buy inside the fund, you would have to check them all as well and see whether they are good or not. I found all of that a lot of work. I could understand if you have a small account and you would want to add up a little bit of money every month, and you're not thinking like making any money in the next 1 or 2 years, but you're just planning for retirement. I kind of get the idea, although I have to watch out a lot, because a lot of them could be good, but like again, research is key. And yeah, the third one is pretty much what I said before. So ETFs is great, but needs research. And I would say that once you do your due diligence and you make sure everything is fine, then I would say that definitely is an interesting buy. I hope you guys like the video. It's pretty simple today, just a brief explanation of what it is and my opinion about it. And if you like what I'm like ETFs and want to talk a bit more about it, then you're welcome to. Thank you so much, guys.